Hi guys, my name is Josh Kepke. I'm a real estate agent in Greater Vancouver, and this is your look at the state of the Vancouver real estate market as of September 2021. We are looking back at the listings and the sales from the month that just was. So let's get started. Home sales dipped 13% when compared to last September, but that should not come as a surprise considering last September marked an all-time record high for the month. Year-over-year base effects will be really hard to top in the months ahead, but make no mistake, the housing market remains strong, incredibly strong. Let's take a look at the bigger picture for a moment. From January to September of this year, there have been just over 34,000 home sales in Greater Vancouver, a record high for this time period. When the calendar turns over at the end of the year, it's quite likely that 2021 will mark a fresh record high for annual home sales. But should we really be surprised at this point? Canadians have been incentivized for decades to plow money into the housing market, which has been backstopped by the government at every turn. Perhaps it explains why the rising housing market continued to rip in September, despite every political party campaigning during the federal election to curb house price inflation and improve affordability. At this point, I think everyone is aware that it's all talk and political grandstanding at this point. It's the cost of capital and the availability of credit that really drives up home prices. So let's frame this up. Inflation currently is running at 4.1%, the highest reading since 2003. Meanwhile, the big banks are dishing out variable rate mortgages at 1.29%. In other words, the real interest rate on your mortgage when adjusting for inflation is nearing negative 3%. So as long as borrowing money remains at real negative rates persists, as long as we're borrowing at real negative rates, the housing will continue to attract increasing amount of capital. It's really just that simple, yet rarely discussed. I can assure you that there would be a lot less condo investors at 2% cap rates if traditional savings yielded more than zero. So inflation is currently running at more than double the Bank of Canada's official target of 2%. Surely that means rate hikes are coming, but not so fast. As of Q4, Canada's total credit to the non-financial sector sits at a staggering 359% of GDP according to the Bank of International Settlements. This is one of the highest totals in the G20, right alongside Japan. The Japanese economy has been suffering under a mountain of debt for decades, with current credit to non-financial sector debt sitting at 418% of GDP. In other words, they're caught in a debt trap and haven't been able to raise interest rates for over 2 decades. And unfortunately, Canada is on the same path. And in my opinion, we are in an era of financial repression. Interest rates are unlikely to be normalized for quite some time. This is not to suggest that you can just blindly plow money into the real estate market and get rich. Valuations are definitely elevated, up 30% in some segments. Some caution is warranted. However, inventory remains impaired, currently sitting at its lowest levels in over 20 years. It's hard not to be bullish on the housing sector given the current dynamics. As always though, let's get into it, starting with the detached housing market. Coming off record levels last September, detached home sales dropped 27% year over year. Again, this should not come as a surprise to any of my regular viewers. Detached home sales are still running strong, slightly above their long run average. As anticipated, new listings are making their usual seasonal uptick. They were up 30%. They were up 30% more new listings in September than there were in August. However, when looking strictly at new listing history for the month of September, there was not much to get excited about for prospective home buyers. New listings in September were their lowest in over 20 years. But in order to filter through the noise, I always look at the months of inventory. Months of inventory for detached homes sits at 3.8, so about 4. However, when you filter it for homes under 2.5 million, which is where the majority of buyers are actively looking, months of inventory for sale falls to 2.2. This is indicative of a tight seller's market. Detached home prices inched slightly higher in September, and the benchmark price now sits at $1.828 million. This is a record high and up 21% from last September. In summary, while sales activity has slowed from all-time record highs, demand remains strong and new listings remain chronically weak. Very low inventory levels are ensuring multiple offers continue, keeping prices elevated and leaving sellers in the driver's seat. Now let's talk about the condos. This will be your condo market update. While everyone is paying attention to the detached and the townhome markets, the condo market has quietly been putting in record sales over the past several months. Condo sales in Greater Vancouver hit a new record in September, coming in at its highest levels in more than 2 decades. New listings fell 14% from last year's record highs. However, condo listings remain elevated from a historical perspective. In fact, new listings were 19% above their 10-year average for the month. Ultimately, we have a situation where condo sales are outpacing new listings, and this is pushing inventory levels lower. Condo inventory plunged 35% from last year's levels. Months of inventory for sale has drifted lower and now sits at 2.7%. If you're looking for a condo under 1 million, the inventory picture is pretty bleak. There is just 2.1 months of supply for condos under 1 million. In other words, similar to the detached and townhome markets, affordability is the name of the game. Everyone is trying to squeeze in at the entry levels, and that is where supply is at its tightest. Prices are climbing for condos any way you measure it, and the home price index has increased 8.4% from last year. And the average price per square foot now sits at $872, and that's a 9% jump from last year. The condo market favors sellers and has strong momentum behind it. The bulk of the activity remains under the 1 million range. My name is Josh Kepke, real estate agent with McDonald Realty. For real estate tips, check out my full disclosure series on YouTube, or you can find it on Instagram. So be sure to subscribe to Vancouver Real Estate Today on YouTube, and follow me on Instagram at Josh Kepke. And of course, you can always reach out to me with a DM or a text or phone call to 604-313-9805. Thank you so much for watching. Put any comments or questions you have in the comments below as well. Have a good day.